Welcome to the System Simplified podcast, where we feature top leaders who share stories on how to successfully systemize a business. Now, let's get started with the show.
Hello, Adi Klevit here, the host of the System Simplified podcast, where I feature top founders, entrepreneurs, and thought leaders about systematizing a business. And today's episode is being brought to you by Business Success Consulting Group, where we create, document, optimize, and implement processes and procedures so businesses can grow and thrive. And today's guest is Kevin Bassett. Hi, Kevin.
Hey, how are you?
Good. It's so good to have you on this podcast. We're going to have a great conversation about a topic that many of our listeners, I'm sure, are very interested in, which is basically what would you say? It would be like strategies on how to build wealth, how to protect their wealth, how to, that's what we're talking about.
Yep, absolutely. Yep. Yeah, we work with clients to help them both grow the both the profit and the value of their business while minimizing taxes along the way.
That's right. That's right. So, you are the founding partner of Bassett Associates, and you are the creator of several proprietary financial and tax processes to help business owners maximize earnings and minimize taxes. And we're all about processes, so we love that process. So, Kevin, let's start with that. You've worked with many entrepreneurs.
Sure
when
do.
they come to you, what do you identify as the biggest mistakes that they make they make money? Because we are working just like we work with fast growing companies, lacking consistency. They're already successful. So it's not like they're not making money. They come to you because they make money and they want to make sure that they build their wealth and minimize the taxes. So what are some of the main problems or the main mistakes that you see business owners make?
Yeah, absolutely. Happy to answer that. Yes, and as you mentioned, when folks come to us, we're known as an upgrade firm, meaning they've started with their local CPA and who did a great job usually of getting them started and keeping them out of trouble. And then by the time they come to us, our threshold is already making $1 million of profit. So they're in the highest tax bracket. And we're seeing a couple things. One, they may not have a good system and process to continue that growth. And then the second thing is that they don't have a system for minimizing taxes. Their CPA is getting them filed on time, keeping them out of trouble, but not proactively minimizing their tax. They're filling out forms for the government once a year.
So it's all about strategy, obviously.
Right,
okay,
yeah, and so lacking strategy in both places.
Right. So let's talk about the first one. So they don't know how to continue the growth. So what do you see there?
Yep. So a few things. So starting out from zero, which overwhelmingly most business owners we encounter did not inherit the business of the wealth. They're founders. They started them from scratch, and they did it through good old-fashioned hard work and grit, and to reach a certain level of success. And that is very admirable. They worked their buns off and did a good job, pleasing their customers. But that's not scalable. And what they haven't done, they're not experienced in systems and processes, which is how you and I connected. And so that's the first thing. And so all they're doing is taking what they have and trying to optimize. And at most you can double. And folks have heard the sayings out there, and there's some books on this where it's certain things can get you to 2x, but they can't get you to 10x. And so now they're making about $1 million of profit, but they're hitting a ceiling of complexity and unable to scale from there. And so they've got to move beyond what just the founder's hard work with some helpers to a truly scalable business. And
so what do you see? Like, what are some successful strategies in order to work on that part, on the growth, on being able to actually multiply their business and continue the growth and scale correctly?
Yep. So a few things. Number one, they need to establish a leadership team. They need to develop some sort of what's sometimes known as an entrepreneurial system, an operating system for the company to create their processes and rhythm for moving along. And then also at some point moving beyond founder-led sales. So starting out, a lot of time the founder will have a a unique ability in selling and going and getting work. They wouldn't have a business if they didn't, and but they need to move beyond that at some point. And so having that sales engine, having a system, an operating system for the company, and then putting in a leadership team along the way, so everything's not rolling up to the founder, and that allows them to scale. And if they're able to do that while maintaining margin, then they can just create a ton of profit. And the higher that profit or EBITDA, the more that business is worth. And the founder, the shareholders are making a lot more money along the way, of course.
Absolutely. And and sometimes it looks like, okay, well, you made a certain amount in profit, but now I'm going to hire a leadership team, which costs money.
It
And now you
does.
have to invest money, but that's like anything else. You got to invest in order to make more money.
Yep, exactly. And for a lot of businesses, depending on whether they're a service or product business, but in a service business, for example, that usually hits somewhere between that 5, 6 million and 10 million. You can grow to 5 million with a founder-led thing and have with a founder-led type business and have pretty high margins, making good money. And they're coming to us at that point. And some choose to stay there, but if you do choose to go past it, you have to invest in that leadership team somewhere between 6 and 10 million, and it gets expensive. You will actually more than likely have years that you made less money then than you did the year before. With some, it takes a little bit of work to get that leadership team integrated. And say if you're hiring four leaders in key positions, no matter how great you are at hiring, probably at least one of them won't work out, and that's frustrating. So you make a little bit less money and undergo some frustrations on that journey
But
between
that's
six
part
and
of
ten
it
million.
because
It
otherwise you're never
is.
going to grow. So that's really the key
Yep.
component on how um, you decide what to do from there. So I agree with that. Okay, good. So we definitely know that we need to organize the business and make sure that you're looking at growth and scaling, at scalability. And
Yep.
you're a numbers guy, so you probably, like if you're making an investment, there has to be a return. So if you're paying your key executive, I don't know, like a very good salary, you still want to see a return on investment on it. So when you do the
That's right.
projection, right, you will see that you're actually making more money because you actually hired that particular person for your company.
That's right. And we warn our business owners oftentimes in year one, the numbers will very clearly show that they do not have a return on investment yet in that first year, right? And that takes some persistence to plow through that. And you're like, wait a minute, I've done this work and invested this money in these people, and I just made money less profit than I did last year, right? They have to look at the long game and hang in there. Yep.
That's right. Okay, good. So that's the first thing that you see is that they don't have a structure, they don't know how to scale it. Let's say we solve that. Now, so this is you're going to get more on your bottom line is going to be higher, but now are we going to pay more taxes because of that?
Yep, that's right. And so you want to make sure, number one, you're dealing with a CPA firm that can handle your growth, right? That deals with clients of a certain size, businesses of a certain size. So you want CPA that is dedicated primarily to businesses, primarily dedicated to businesses in the highest tax bracket, and has a system to minimize the taxes, regardless of whether you're making $1 million in profit or 100 million in profit. The system we developed at Bassett Associates is called the MELT system, which stands for maximize earnings and lower tax. The reason all that's important is this system should not get in the way of you scaling your business and growing your earnings. You don't want the CPA to come in and tell you to spend down all your profit at year end for the sake of taxes, because what you've done is you've seriously number one, the money's gone, and number two, you just torpedoed the value of your business. To put that in simple numbers, let's say a CPA gives a strategy, a business made a couple $1 million in profit, and they said, all right, we're going to spend down all your money in December and buy a bunch of stuff, spend down your profit and drain your bank account, and we'll knock down your taxable income by $200,000. And you save about 40 cents of that perhaps. And so fine, you saved 40 grand and or sorry, 80 grand. And so you saved 80,000 in tax, but what you've done by knocking down your EBITDA 200 grand, if you're business that is a size that it's worth 5 times EBITDA, you just reduce the net worth of that shareholder by $1 million with bad tax strategy. Instead, what we do is we do it through structure. And the beauty in the United States is not all income is taxed at the same tax rates. So the whole strategy, whether you're a business owner or an investor, is to get as much of your income as possible taxed at these preferential tax rates. And by doing that, we can shave many points off their effective tax rates and continue to apply those strategies. Again, whether they're making a million or two in profit or 100 million in profit. And
So
that's
when
the
you say
key to have a
structure,
system.
you mean like structuring the corporation?
Yeah, in corporations, plural, or business entities, plural. But you're exactly right. You have multiple entities. So generally in the U.S., when a business starts, once they have, I don't know, about 80 grand in profit, they should be an S corporation
Mm-hmm.
to save on the self-employment tax and still get what's called 199A. And the operating company will generally continue as an S corp. That's an easy bread and butter, tax strategy 101. Good stuff. And cheap and easy to implement, right? They didn't have to go buy a truck to save this money. But as they grow, you're going to want to do certain things like pull assets out and put them in LLCs, taxes, partnerships for certain reasons. And then you'll want, when they're in the highest bracket, we'll also add a C corporation to the mix for excess profits. Maybe set up a management services organization. And then we're moving money out of their 37% bracket over to the 21% bracket. And again, they didn't have to go buy a truck or spend down their December profit to do that. They're just moving it to a different bucket. Also, if they've got a bunch of investments as they're investing these profits outside of the business, have those running through a Roth IRA or a life insurance structure. And all this, when you add these multiple entities, this is known as a hybrid tax structure. And that allows you the whole goal is to take advantage of these preferential tax rates. And the more income we move to these lower rates, the lower their effective tax rates as they scale.
Yeah, but you definitely need an expert in order to teach or show those tax strategies because you can't do it by yourself.
Yep.
What would be your recommendations for our listeners in terms of they're listening to this? And maybe some of them will go, well, I already tried. I mean, I went to this person and they told me to do this or told me to do that and didn't work, too much hard work. Like, how do you recognize that you have the right tax professional to help you with those strategies?
Yeah, absolutely. So one is, look at what they're doing. Are they in the two comma club? It's a good question, right? Do they have experience being a business owner making that? That's a good vantage point. The other is what is their client mix? Are all their clients business owners making more than $1 million, or are they uh, dealing with folks less than that? And that it's okay, whatever they are. Just make sure you're at the right firm. I'm in a peer group of CPA firms. And one of my good friends is his entire specialty is what he calls Main Street. He only specializes in businesses that are less than $1 million, and his system is set up for those folks that are not in the highest bracket. So when we get a referral, a business owner in that category, we send it to him. And when he has clients that maybe grow up or gets a referral from those over $1 million, he sends them to us because his system is set up, his entire ecosystem for folks at what he calls Main Street. And he's great at it and he's passionate about it. And that is the right CPA for them.
And you
And
need it too, because we all started at that point.
absolutely, all started. I
We
started out of
got
my
it.
house
Yeah.
making nothing, right? So absolutely, and great. And so he's completely dialed in, has his entire CPA firm set up to thrive and to help his clients thrive in that ecosystem. So that's perfect for them. Meanwhile, our ecosystem is for those and the issues with those making over $1 million in profit. So just make sure you're in with the right fit. And that's
So
why
you need to ask those questions, right? So when you
that's right.
hire a tax professional, I mean, first of all, you have to look at the tax professional that you have. You might outgrow it. So then you need to know that happened. Or if you are hiring a new tax professional, you feel like, okay, I need something else. I need something better. You got to make sure that you ask those questions. Those are very good questions.
That's right. And then two more red flags.
Yeah.
If you are in the highest bracket and your C or really any size and your CPA is just simply telling you to buy a 6,000 pound truck at year end or spend down all your year end profit. That's a red flag that's not a scalable system to maximize earnings and the valuation of your business, right? That's simplistic tax planning, and really it just kicks the can down the road and kills your net worth, right? It's a loser's game.
It does. It does.
Yeah.
So you also help people with their valuation or guide them through selling a business.
Yep, sure have. In fact, we've at this point I've assisted with 336 M&A mergers and acquisitions transactions in my
Mhm.
career, and that includes my time at Ernst& Young before I started my firm. That was kind of crazy in the late 90s. Got a lot of experience, and we're seeing that wave again, right? And a business owner, when they sell, it is ideal, if possible, to sell during one of those waves when private equity is paying a lot of money for businesses. And I think we're starting one of those waves here again as we record this in summer of 2026. We're seeing signs that it's picking up big time.
Okay, good. We want to make this evergreen podcast, so
Yep.
our listeners will evaluate at that time. But yeah, no, that's
That's
definitely
right.
helps. But
Which is
what's your
why I put the
philosophy?
date in. Yep.
That's right.
Yep.
What's your philosophy about selling a business as opposed to keeping it as an asset?
It is a great question. And I'll start with saying the beauty of being a founder entrepreneur is we have that choice and we can be intentional on what we choose to do with the business. Now, I'm also a private equity investor and have started a total of two businesses that I sold, and that was a choice. And I did that from day one. One example was a payroll company, and the other was with some friends, a construction company. Which is an industry that I love. Uh, but my CPA firm, if you ask me today, at my age in my mid 50s, I right now I'm choosing to hopefully keep it forever because I love it. In fact, I'm recording this podcast from the beach. I've set up my life and have been very, very blessed to. I think I can do this forever. So I plan to keep it and have passive income and always, and then all the good stuff that
But it's
comes
also
from
a
it.
game. It's something for you to do. I
It
mean, you are
is. It's
passionate
my
about it and you
it's
are
my
helping
sport.
people. Yeah.
Yep. Yeah, it's my sport. I absolutely love it. And I have the best job in the world. On meeting days, I get to be on Zoom with business owners around the country, just doing great things. And I love it. And that's a choice. Others, it could be burnout. It could be other reasons they want to do something else. They could choose to sell it. The thing to know is you want to sell it tax efficiently and make sure that it's walk away money that you're set for life. Otherwise, you've got the unhealthy possibility of outliving your money or having to go work for somebody else, which uh, heaven forbid, I could not imagine doing that again. So the beauty is have a choice and be intentional. But if you're going to keep it, that goes back to what we talked about earlier, is you have to have the systems and processes and leadership team to allow that business to uh, to work without massive time commitment from you. We
That's
can
right.
be in. Yep.
You have to not be a slave to it, but then use it as an asset that is actually giving you the passive income that you want.
Yeah.
Or the active income. I mean, you can be involved as well. I mean,
Yeah.
it's
And
your,
you want to
it's
be intentional what your role is, right? So I have
exactly.
some that they'll just come in and close a few sales and meet with some key clients, and that's good for them. Others will be in totally a chairman role. I will say I don't often see it work well where they're completely 100% removed and can ignore it. They usually have to have their thumb on the pulse somehow. But I've seen everything from folks working, you know, 30 something hours a week down to less than 10. But yeah, it's got to be something sustainable.
Yeah, and as you said, it's a choice. And I think that's what you give people, that's what you give entrepreneurs choices or ability to live the life that they want to live and lead them in the way that they want to lead them.
Yeah. One other thing to be large enough to have a leadership team, I think you do have to scale to a certain size.
Yeah,
It would be uh, a challenge to have a small lifestyle business, as we refer to them, with a leadership team. There's often not enough room there, enough profit there to do that. So,
agreed. Agreed.
yeah.
Well, Kevin, if our listeners would like to get a hold of you, how can they do that?
Sure. Our website is BassettCPAs.com. So BASSETTCPAS.com, or Google Bassett and Associates. And yeah, I'd love to talk to folks if folks are in a situation where they feel they need to upgrade. They had a wonderful CPA that got them started and kept them out of trouble, but now they're at a higher level and need to move to a firm that deals with the issues of those in the Two Comma Club. We're happy to help.
Fantastic. Okay, we'll include it in the show notes. And Kevin, thank you so much for being a guest on this podcast. It's been a fantastic conversation with a lot of usable data that our listeners can apply. So thank you.
Yep. Thanks for having me anytime. Appreciate it. Thanks.
Thanks for listening to the System Simplified podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.